Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, October 30th with our pre-market morning strategy and briefing session. Go ahead and start with the three pillars here, GammaEdge, like we always like to do. Sentiment, structure, and trend. We'll start with our trend MTM market model. CT continues in a downward slope. We did try to stabilize midday yesterday and tried to cross back above the moving averages. Again, highly prone to failure at this time with our complete downward expansion of the ribbon and the moving averages all in the negative slope, trying to turn to some sort of consolidation and then possibly turn back up. So we'll watch this today and look to see what occurs early on in the session. If the bold CT does start getting above this short-term moving average, or sorry, the moving averages, then we could look to play some short-term plays to the upside. Again, with the caveat that the structure or the trend is down and we're under the colored ribbon. So failure could happen at any time, as you've seen previously back here, 1022, and then 1025, we tried to bounce and then failed pretty quickly again. So again, that would be shorten your time frame, smaller positions if you are looking to go long against the MTM. The CT obviously is the 1 to 3 day, and the CT is instantaneous intraday, and then the moving averages are 1 to 3 day. So that should be your time frame you're looking for. And then obviously watching Delta Balance, net stack command, and then how the vol M is trending throughout the day. So anyway, we'll see. As is stated, bulls have lots of work to do to get back even up towards the colored ribbon and then try to get through the colored ribbon. So very early on in an overall possible trend change. But again, we've had multiple failures previously. So until that's proven different, my thesis would be that we could move back up, but then look for a failure pretty quickly if that happens. The SPX Full Complex here, we did have a bullish improvement day over day. Obviously, we've been talking about the JPM strike 58.35 pretty extensively within the overall transition there too. Yesterday, we came down to 58.04, I think, was that lower range. We were talking about 5800. So again, drawing a range for today. We have 5790 down here, and then obviously 5940 to the upside here, but then we have transition within this overall 5840, 5820, PGEX 5850. So again, we've been talking about those same levels day over day. And I plot those on charts, obviously 5800, 5850, and then in the middle, that transition area that we need to at least get above and stay above if we have any chance to move up towards 5900. So we'll watch those areas intently throughout the day. Obviously on the full structure, we are call dominated, seeing the expected move creep up just a little bit, so 0.68%, so volatility creeping up just a little bit there. But call dominated above and below spot price, which is good. So we would look at that as that the market or the full complex is supportive on any pullbacks. So an opportunity to get involved in the market. Obviously, the caveat is the MTM, which has been decidedly down with the sellers in control. Delta Balance for SPX improved slightly day over day. Today for Wednesday, obviously we have a strong bull on the on the Delta Balance. Right-hand plane is really where that OTM call speculation has been waning, and we've seen that erosion really quickly previous days. So that's improved overall a little bit. But again, you see Thursday and Friday, we still have that OTM call speculation, which is not that strong. So the chances of us moving higher is probably abated without OTM call speculation. Now, if we do see this start to change, and we do see the structure above spot price become more bullish with the OTM call speculation, then we have a chance to move higher. But again, that 5850 is looming large overhead. JPM strike 5835. Left-hand plane, the in-the-money call holders have been pretty strong and holding pat, which is giving us that supportive type action every time we move down. Yesterday is the same deal. We moved down towards 5800, and then we bounced. Now, if that changes, if and when that changes and that left-hand plane starts to weaken, then that's when I would anticipate a little bit stronger move to the downside. As of now, we're not seeing that. Market participants are not positioning for a significant move to the downside. We're just kind of in this steady state cycle where we'll get a move up. OTM call speculators, if you get a move up towards 5840, 5850, they take profit. Price comes back down towards 5800, where the left-hand plane in the money call holders are there. They stay pat, and then we see OTM call speculation. So we're just kind of in this overall state. If you look at the price action really on a 65-minute chart or 4-hour chart, we're really just range bound from 5750, 5800 up towards 58.50, and we're just kind of completing this overall cycle within the range, which is great for range traders, but not necessarily for traders that are looking for expansion of price to the upside significantly, or to the downside for that matter. So SPY continues kind of this off-on look. Obviously, right-hand plane is bearish today, so in the money puts, not really a significant amount of OTM call speculation. Thursday and Friday improve, and then Monday we're back to strong bear again. So we're just seeing this back and forth action. GEX ratio staying just above 1, which is a good look as price continues sideways, but we're really not advancing and making any progress. Excuse me, and not making any progress in the overall market either. So we're just churning. Basically what I'm talking about within that overall range. So we'll see how that continues to play out. Qs actually look stronger than lots of the other portions. GEX ratio increased a little bit there, 1.4. Looks bullish across the board in through Monday. Obviously Thursday looks a little weak, but Qs are actually stronger than the other sectors. So we'll continue to watch this. Significant amount of EPS this week. Microsoft, I don't know who else is today, but we just a large number of Google was yesterday, obviously, just a significant number of the Mag 7 reporting this week. So I would anticipate more volatility in the Qs and the underlying tech stocks there. So we'll just continue to watch that. Less is more during EPS week. Just even if you wait until the dust settles and the election next Tuesday and post-election, and then you look for your A+ setups, that's pretty much what I'm doing. Yesterday I did trade some leveraged ETFs. Just short-term trades. I'm not really positioning for anything long-term, obviously, because we have a significant amount of volatility ahead of us, and the market definitely could provide some larger moves up and down within the overall range. So the 0 DTE heading in today, drunken sailor range 58.50 to 58.10, so really close to that 5800 that we saw yesterday. 58.05, so I'll mark that as a area where I'd anticipate some sort of supportive action. But again, remember, when you're trading within the overall drunken sailor range, it can be very volatile, it can be very choppy. So that's why I decided to go with leveraged ETFs yesterday, and it just allows me to be able to put the position on. If it doesn't work, I take it off. We got the move back up towards the 58.35, 58.40 level at the close. Vol M command was trending up, which was great. So that gave me the confidence to put that trade on within an overall MTM that was down. So it was a counter trend trade, but good risk reward within an overall 0 DTE kind of structured look. 58.50 the upside, unless we see a significant amount of volume and targeting above that 58.50 level, I would anticipate that kind of be a capping area. We see those in the money puts come in at 58.60, 58.65. Net stack command 5800 to 5900. We'll look at this automated throughout the day and see if this changes, but we do have in the money calls, OTM calls, so we're starting call dominated, which is supportive and a structure that could move to the upside. But again, not looking for a significant move to the upside unless we get across 58.50 and we see a vol M put centroid and call centroid that's in a positive slope and targeting up towards 58.75. We put those end points, on the vol M command now. So make sure you're using those. It gives you a nice visual look of where the overall market could trend if it stays on the path. Obviously, path dependent on the vol M command and path dependent of market participants continuing their overall volume direction that they're putting trades on. So +1 DTE, Paul pointed out here, indecisive, lack of OTM calls. That's what we're seeing with the Delta Balance, right? Right-hand plane above spot price. We see today OTM calls, but then we see the erosion of OTM calls for the +1 DT. So that's why I talked about that range. Overall, kind of like sine wave, where we move up, the fear and greed, people take profits on the OTM calls when they get price appreciation, and then it drops back down. But then the left-hand plane in the money calls stays pretty well pat. Poor liquidity in this area to the downside that Paul pointed out, below kind of that 57.80. We have this overall range here, 57.85, 57.90. Again, remember, these areas are like sponges, these demand and supply areas, right? We can go below them and then recover. For me, it's how long we stay below them and what the dealer adjustment looks like when we go through those. Is it a significant dealer adjustment, or is it just slow and methodical kind of trek down where there really is not a significant amount of transactions that are occurring? So for me, those areas that I see a large dealer adjustment become more important than just a slow methodical move through those. Transition widens a little bit for +1 DTE, so uncertainty when the transition widens increases, 5820 to 5860. So again, just within that overall range. Net stack command, we see the right-hand plane strike there, 5835. Obviously, JPM is there, and then 5800, 5825 on the left-hand plane strike, 5835 on the charm there with the JPM. So, all right, so thesis for today. I think we've covered the drunken sailor range, but again, depending on where we open at, I'd look for a pull down towards this 5810, 5820. If we get below there, I'd see some weakness down towards, if we get below 5810, I'd see some weakness possibly down towards that 5800 level, kind of where we bounced yesterday. We've bounced there multiple times through the past 3 to 4 to 5 days. So I think that's a pretty important area, at least on a technical standpoint, and around Livermore number and a large gamma delta number. So that's kind of why I'll pull this up a little bit, probably towards 5800. Upside, obviously, I have 5835 mark, JPM strike, pretty important. Above 5835, we'd look for yesterday's high, which is this green line, basically 5842 area roughly, and then 5850 to the upside. So that's kind of where I'd be looking. Obviously, volume command, not really anticipating that we get above 5850. If we do, transition there could possibly pull us up towards 5860, 75. Really just anticipating a larger range shop within the overall drunken sailor range, which is pretty close to what happened yesterday, just within the overall range. So anyway, that's all I have for today. Obviously shorter or position size down, take your time frame down, just within the overall structure that's not necessarily certain, and we don't have a significant amount of call speculation to the upside, so not anticipating a huge move to the upside, and then we have a lack of OTM put speculation to the downside, so really we're just kind of stuck again within this overall range until we have a catalyst that can move us out of this range. That's what I anticipate. Now, individual stocks will move more, so if you're into looking at those, obviously look at the scans, new call Domdell, or if you're short, new put Domdell. So, all right, that's it, everybody. Have a great day. We'll see you in the Discord in a few minutes. Thanks.